Hey everyone, welcome back. So every second video that pops up on YouTube or any other social media is talking about market crash. It's coming and we should buckle up. So in this video, I'm walking you through and clearing some doubts regarding the potential market crash. Regardless of the situation, a smart investor is the one who makes the best of any opportunity. Well, it's kind of true in life as well, but I think in investing, it makes more sense. So let me walk you through and explain in a really simple way why everyone is freaking out. I promise not to bore you with the numbers or chart that won't make any sense to you. And at the end, I'll show you the steps that I'm taking for this so-called market crash. Whole purpose of this video is to provide you straight up answers. So continue watching and please do me a favor, hit the like button and please do subscribe because it's really awesome to see our family grow. Okay, now let's talk about the market crash. And I'm sure any video you watch, you will get to hear the word inflation. So what is inflation? Here, in simple words, a gallon of milk will cost you more to purchase today than it did last month. Simple as that. The buying power of the currency decreases over time. That's it. Just remember that. But if you do want to nerd it out and hear the whole thing, then here's a screenshot of the actual definition. It goes, the decline of the purchasing power of the given currency over time. Rest, you can Google yourself as it's not important for the purpose of this video. Now, that is out of the way, let's start talking about the indicators we are seeing in the market that are signaling potential crash or making everyone nervous. So one of the first thing I want to bring your attention to is the Nasdaq chart. And something really weird happened last week with Nasdaq. And that is the reason why I waited to kind of do this video, because I wanted to get like clear indication of where the market is heading. So what happened last month is, what happened last week, not last month, what happened last week is that Nasdaq turn, or MACD on Nasdaq turn, I'm going to circle it right here and blow it up, turned negative for the first time since April, right here. That's what happened just last week, where it turned negative for the first time since April. So when it turned negative in April, which was right here, Nasdaq dropped almost 7.85% or almost 8%. And on May 13th, I marked it here, is when we are at the peak. And since then, the market started to go up, or Nasdaq started to come up. Now, when Nasdaq goes down 7 to 8%, what happens to the high growth stocks like Tesla or a few others? They go down even more, because Nasdaq is a combination of all the stocks. And if you are in a high growth stock, which most of us are, then the value and the way the high growth stock drops is really, really high, or at a much higher rate. And the candles that you see over here, these are not regular candles. These are Heikin-Ashi candles that basically talks about the trend. So they take an average and then they show. So the trend that you see is bullish, because all the green candles going up and the wick on the candle is on top. That means it's a bullish trend. So that is the first indicator that shows that there could be a potential downtrend. I'm not calling it a market crash. I'm just calling it a downtrend. Now let's talk about some other stuff here. So this chart that you see on your screen is actually disposable income chart. And this relates to the money coming into the stock market. So the three peaks that you see over here, 1, 2, 3, this happened right around April of 2020. This happened around January of 2021. And this happened around March of 2021. So why are we seeing these three peaks? 1, 2, 3. Why are these three peaks over here in this chart? This is the time when we received the stimulus payment. 1, 2, 3, when all the Americans received that first initial checks, then the $600 checks, then another $1,400 checks. That three payments that we received was right here. When we see people getting more money, the money comes into the stock market, or as it did. And that's why if you pay attention over here, you can see that in January, so let's assume like in January, right in December end, we received that $600 payment. And if you correlate that to the stock market, we can see that the stock market went up really high at that time. And the same thing is true if you go back and see the charts. You can see as soon as we received the money, a week or 2 weeks later, the money came into the stock market because people had more money to invest. So now let's talk about the bond yields. And I promised you I'm not going to bore you. yields, so I'm not going to go in detail about the bond yields. Just I want to show you one thing. This is really weird what's happening with the bond yields right now. In past, anytime the bond yields have gone down, the stock market has gone up because people are less worried about the inflation, so that's why they're not putting their money in the bond yields, and then they are investing in the stock market. But anytime the bond yields have gone up, the stock market has came crashing down. This is weird because now the bond yields are going down, as you can see, from all-time high, but the stock market has made a trend going up, but not to the same degree that we saw in 2020. And of course, the relation is right here. Okay, so it's a very weird shift that's happening in the bond yields or in the bond market, that even though the bond yields are going down, the stock market is not coming back up as most people thought it's going to. Now let's talk about the crypto connection. And this is a crypto connection I want to bring to your attention, is because everybody is saying that, okay, if the stock market is going down, you should put your money in crypto. Not so fast. So here's what's going on. I'm only putting my money, again, my opinion only, into the very high conviction cryptos that I have, like Ethereum or ADA, stuff like that. So there's a shift. On top that you see is Bitcoin. So Bitcoin has came down from all-time high. We know it, how the crash happened. But look what happened. Ethereum also came down, but Ethereum picked up. The orange line that you see is Ethereum. It picked up more as compared to Bitcoin. So the shift is definitely there. People are spending or investing more money in Ethereum as they are in Bitcoin because they see a potential upside for Ethereum more than Bitcoin. I kind of agree with that, the total percentage. I'm not talking about the price here. So in my opinion, the best time to invest, what was it? Last week, a week before? Nobody knows, because again, it's not that if the stock market is going to go down, the crypto market is going to go up. It's not happening. People thought that's happening, but it's not happening. It's not working that way. The stock market is going down and the crypto market is going down. That's a very weird shift happening, and that is why people are worried that, hey, when is this going to end? So now we have cleared few straight up examples of why we are seeing this shift. Now let's talk about the trades or the things that you can do in current market condition. Again, not an advice, just my opinion. This is what I'm doing with my money. So please do your own research and of course, be smart about how you're playing according to your financial situation. Okay, so what I'm doing right now. So number one thing I'm doing, and I'm gonna kind of mark it over here, is number one thing I'm doing is I'm staying away from buying shares except the high conviction stock. I'm not buying any shares. And you know, the more and more I learn about stock market, the more and more experience I get in investing, one thing is very, very clear. You can go and buy 100 stocks and yet make the same money, or you can buy 10 stocks and make more money. So what I'm saying is that you need to go and pick the high conviction stock for you. Again, I know which are mine and I'm picking those and I'm making videos on those. You need to go pick your high conviction stock yourself, and I'm staying away from buying any other shares or any other stock because I'm not convinced that they are going to do well. That's number one thing I'm doing. Number second thing I'm doing is I'm getting out of my winners. Yes, hear me out here, okay? And saving cash to buy high growth or conviction stocks. So what do I mean by I'm getting out of my winners? So in my stock portfolio, I have some shares that I bought straight up out of my own research. They're not in the news. They're not in Wall Street bets. Nobody's talking about them. But I saw the potential in the service. I saw the potential in the stock and I bought it. And some of them have turned out really well for me. Farfetch is one of the names. I bought the stock at $10. Right now it's trading at $50. It gets gone up to like $60. I'm planning on selling that stock next week and getting out of it completely, closing my position, and the winning that I have from that, saving it aside as cash, not buying anything right now. You know, again, this is not the market, and I'll tell you in a reason why. And I'm getting out of it. I'm doing that for multiple of my stocks. Like for example, I did Farfetch, I did Novavax. I bought it for $17. That thing is trading at like $200. I made good money on that. I'm getting out of it. I made the gains that I wanted to make. Now I want to save my cash for this potential crash or downturn. Then on top, what I'm doing is any other stock that I'm not so bullish on and has given me gains. You know, not necessarily I'm up like say 40% or 50%. Like some of these stocks I'm up like 900%. Not those. Maybe if I'm up 10% or 15% on those stocks, I'm getting out and saving my cash. Again, there's a saying that not trading or not placing bet is another way of trading. So it's not that you have to buy, you have to sell. Just making a decision of not buying and not selling is also called trading. So then the third thing I'm doing for options, and options is amazing right now to play, is I'm selling cash covered puts. I have covered that in my past videos of how I'm doing it. Basically, this is the best thing you can do right now because the time decay or the theta decay is going to work in your favor. A recent example that I did was on SoFi. So SoFi is one of my high conviction stock, and I recently sold 100 puts for 17.5 for December 2023, and I got about $86,000 for selling those puts. So of course, bank is going to put aside like $175,000 because I'm betting that by January 2023, if market is, or if SoFi is at 17.5, I'm going to buy around 10,000 shares of SoFi. So they're putting aside that money on through my margin account. So they're not really taking the money. They're just blocking my margin. So I don't have access to that margin. I'm absolutely fine. But in return, they're giving me about $86,000 that I can use today. Amazing play because I can put that money aside in my account and wait for my high conviction stock to kind of have a flash crash or kind of go down all of a sudden and I jump on it. Okay, now what I'm doing, the other thing is of course, as I mentioned, I'm saving my money for the high conviction stock. And this is really, really key. There is no two questions for me about it, that right now, the best thing I can do is to save as much cash as possible in my account. So I'm ready to jump in when I feel the market condition is right. Because the MACD on Nasdaq just turned negative. So I want to monitor it and see how the MACD turns. Is it the moment the RSI started to go up and the MACD started to go up and the candle started to look green, that's the time when I will be putting my money in. Or of course, if any news comes out, any bad news comes out for my high conviction stock, I gave you an example like Tesla. So I'm basically saving the money. And this is another play that I mentioned in my previous video right here that I'm going to bring to your attention is Palantir. What I did is I sold $125 for January 2023 and I got about $80,000 for it to use today. And I'm going to put that money aside and I will wait for the right time. Okay, now let's talk about what I'm not doing. I'm absolutely not buying calls. No buying of calls, because calls is going to get killed in this market condition because of the time decay or theta decay. If you're selling puts, the theta decay or the time decay is going to work in your favor. So I'll give you a recent example of it. So look, this is my Tesla holdings right now in one of my accounts where I have these option contracts open. So I sold 20 puts for next Friday or this coming Friday for Tesla for 500, and I got about $1.49 for each, about $3,000. I sold it on Friday or Thursday when the Tesla stock just went down, and I'm already up 42% on that. So I bet it if by next Friday Tesla stock is 500, I'm going to buy 2,000 shares of Tesla. Okay, that was my bet, and I got about $3,000 for it. I'm up around 42%. See, puts, the time decay, just one day gave me 42% return on that. Then I have about December 500 put. I sold it months ago, right when I sold this position or when I bought this position. I'm going to explain that in a second. So I sold I sold 4 puts, and for that I got about $54 for selling it, and I'm up 44% on it because of the time decay. Then I have December 580 call that I bought. I'm up 33% from it. I was up higher on it, but because of the time decay, my total value came down, and I'm waiting for a good day in Tesla to get out of the calls. But look what I did. I bought leap calls for January 2023 for $900. Now, if you're watching this video, you will agree, right, that Tesla by January 2023 is going to be above $900, right? In my mind, again, my opinion only, there is no question about that. The Giga Berlin, the Giga Texas is going to be online. They will be producing more cars. Forget about FSD, forget about 4680, just the sheer volume of the cars that they will be selling. The Tesla stock will be more than $900. And that was my conviction when I bought this particular position around 2 months ago. At that time, I paid $240 for it, and right now is at $102. So basically, I would have bought the same position 50% cheaper or more if I were to buy it today. And look, I lost 57% on this bet. So what I'm saying is, and this is call, that is the reason why I'm not buying calls at all in this market condition, because the market sentiment is weird. It's weird right now to buy calls. That's why I'm selling puts, because I know the time is going to work in my favor. So that's what I feel. We are seeing some weird shift in the stock market. And the only thing that worries me is, what is the catalyst that will help us take out of this slump? I don't see any in the near future. It's unfortunate, but I do believe that we might see a run-up in tech and other high-growth stock if we see a spike in the number of cases with the new Delta variant. I hope we never see that, because it's just sad to see that, all of a sudden this new variant came and now everybody's worried about the COVID. We thought that the life is going back to normal, but we might see a shift in the stock market. I hope it never happens. Also, because that's not the kind of gains that I want to make in the stock market. I want life to be normal and for us to see normal gains. Also, as we near the Q3 earnings, we can see a small jump, but will that jump be enough? That is something we all of us witness together. So I hope I was able to provide you some value and some answers to how I see the market tread forward in the coming months and how I'm taking advantage of the current conditions. If you get anything out of the video, please give it a thumbs up. And if you want me to cover any stocks, then do mention in the comment. I love reading everyone's opinion. And thank you for watching. Love you all. Until next time, you all have a sparkling day.